Yeah, so I'm here with John from Action Figure Grader. Um, we've been in contact, and you know, I'm all about investing in yourself, and not just comics, but investing in your future, whether that be real estate, stocks, all that kind of stuff. But I'm an amateur compared to this guy. This guy knows this stuff, so we're gonna jump into more stuff, and we also have a common bond of comics and nerdy stuff and action figures and stuff like that. Growing up, I loved playing with action figures. Like anyone that knew me knew, like, where's David? Oh, he's probably in his room playing with action figures. I had a couple. I see you have a bunch of Star Wars stuff, so I had a couple Star Wars figures back from the 70 when they come out, 77.
77. That's right.
Yeah, I had C-3PO and who else did I have? I had someone else, but yeah, introduce yourself. Tell me a little bit about yourself.
Well, first of all, David, thank you for having me on. I got two important points. Number one, your channel is newer, and it's honestly my favorite channel on YouTube right now. I'm really enjoying the content.
Oh,
It's
thank you.
all, you have the numbers analysis that I love. You have so many different wide range of topics. So that's number one. Number two, I owe you a big thank you because
Mhm.
I started using your market analysis kind of format
Mhm.
to cover what I cover, and that's graded action figures. I
Yeah.
cover, rare, modern, and vintage Star Wars figures that have been graded similar to what CGC does. There's companies that do it for figures, and
Yeah.
I started using your format, and it's really been a big hit with my subscriber base. So I
Oh,
want to say thank
awesome.
you for that.
Cool.
Um,
Yeah.
but anyway, it's a pleasure to be on here to talk finance and wherever we want to go with it. So
Okay, cool. Yeah. Yeah, I'm relatively new to YouTube. I've done a couple of these. I really enjoy them because I love just talking to, other people and things like that. And you know a lot about like the financial world. You are in real estate, right?
yeah, I'll give you a little background on me. It's kind of a weird but interesting background as it relates to kind of what's going on right now out there in the kind of macro economy. Uh, I graduated with a degree in finance with a minor in economics.
Mm.
So I come from the number side, and I did investment banking right out of college for about 4 or 5 years. So I helped take companies that were privately held public on the stock exchanges.
That's cool.
We did secondary offerings, we did mergers and acquisitions, we did private placements, we did all kinds of different finance related stuff. So I had a deep background on that, and went through the dot-com bubble bursting in 1999, which we can talk about later if you want. And then I got into real estate after that, and I've been doing real estate now for about 17 years, both rental properties and investing, but also helping other folks buy and sell houses. So I'm in that market knee deep right now, and as you see in the press, and as you talked about on your channel, it's just an insane market right now. So
Oh, that's very cool. My girlfriend, she's in real estate, and she's been about a year and a half, and it's been pretty good for her so
pretty good.
far.
She picked a good time to get into it.
I know, and that's what people are saying. It's like, oh, you're in a great time. I don't know if you saw, the CEO of Redfin came out, and he had all these like different like facts and data, and he said there's more real estate agents than active listings. And
I don't doubt it. There's one agent for every, where I live in Nashville, in Middle Tennessee. There's
mhm.
one agent for every 25 people right now in Nashville that live here.
Really?
So
That's
yeah,
crazy.
yeah, it's
Oh,
crazy.
he also had the CEO of Redfin also had a stat on Nashville. He's saying that the average person that lives in Nashville is looking to spend like 430,000, but so many people are coming from like California and New York, and they're looking at spending like 720. So just they're almost
It's a
pricing.
60%. Yes, yeah,
Yeah,
it's a 60% difference for people out of state versus in state, and
yeah,
it's just driving the market like crazy. One in every four houses that sell in Nashville right now is cash. One in every four.
yeah. That's
So
how it is around here. It's like you got to be like have all these different like stipulations. The Redfin guy said he started off with saying that was it someone actually put in the offer the right um, to name their firstborn kid, like in the offer, and they still didn't get it.
I still didn't get. There's actually loan sharks now. There's a loan sharks for buying houses now. I just read about this.
Really?
where if you want to be able to offer cash for a house, they'll
Hmm.
loan you money short term, put it in the bank account so that way you can offer cash. And then after you close, you got to refinance the house and pay them off. And it's like usury, whatever the right word is, in terms of the
Yeah.
interest rates. It's like going to a pawn shop to buy a house. I mean, it's just
Oh my
crazy
God.
interest rates. But that's what
So
people are resorting to now. It's crazy.
it is. So let me ask you something. I'll bring this back to what we're into, comics and action figures. But why do you think? Because what I see is the same thing that's happening in the housing market is happening to comics, and I'm assuming action figures as well.
Sure.
This massive inflation, and I attribute it to lower interest rates, the fact that the Fed has been printing money, so supply and demand, they put more money out there. Money's actually worth less now than it was prior, and inflation is usually 2% a year. I think it's somewhere around 15 to 25. I've seen some people say. I don't know exactly. I mean, lumber's up like 400%, just ridiculous. And that makes it harder to build a house because you need lumber and it's more
Right.
expensive. So, I mean, a bunch of the factors so why do you think housing is going up and maybe even like the collectible market going up?
It's a great question, and I think that when we go back and look at where we are right now, 10 years from now,
Mm,
I, you and me and anyone else who's doing collecting or just living right now, we're going to look back at this time as a pretty unique moment in our country's history because we've never, as a country, shut down before completely for a
yeah.
period of time, and it's kind of unprecedented. What with no one really knows what's going to happen and whether the current environment is a short term kind of blip as we kind of get back to normal, or if we're in for as you talked about, a really high hyperinflation environment.
Hmm.
And all of the data that has come in recently, a couple of days ago, the consumer price index data came out, and it keep in mind that that data is historical, right? So
Hmm.
it's looking in the past, and that data shows that uh, even adjusting for two items that uh, historically fluctuate a lot, which are fuel and gas, even or fuel and groceries.
Hmm.
Even adjusting for those items, we had the highest inflation measures in 29 years.
Jeez.
And what that means is that we're kind of at a, a fluctuation point or a kind of a major peak point of we don't know what's going to happen, and there's so many different factors that have all kind of combined together. You mentioned a lot of them, right? The Federal Reserve is printing money right now at unprecedented rates. So that's monetary policy. Combining that with actual fiscal policy from the current administration and past administrations, the
Hmm.
actual president and Congress, they're spending with stimulus packages. They're trying to plan another 1.9 trillion right now,
Ugh.
and so you got it's two different things that a lot of people don't, a lot of maybe newer folks who are new to this stuff. There's fiscal policy and there's monetary policy, but fiscal policy is how we spend that money, right? And so you got high spending combined with high printing of money, combined with artificially low interest rates because the Federal Reserve, they got three main tools to control inflation, right? They can adjust the federal funds rate, and that's the rate at which banks borrow from them or from other banks to maintain the required cash reserves that they have to be part of a federally insured bank, right?
Yeah, and
So
that's like
there's
the
that.
rate. That's like the rate that most people hear. Like when they're like,
Right.
"Oh, rates are at 2%, 3%." That's the rates that most people hear.
Yeah, and what people don't really understand is that really drives the cost of capital for everything. So that's the cost of capital for banks to maintain their kind of minimum reserve requirements, right?
Hmm.
But if those go up based on the Fed's actions, then they in turn have to lend money at a higher rate to corporations, to us as consumers for mortgages or credit cards or whatever. That drives, interest rates higher for all of us. A higher cost of capital puts puts the brakes on the economy, right? That's
Hmm.
what puts the brakes on inflation because you're slowing the economy down. So that's one of the main ways that the Fed can control uh, rates. Is basically through controlling the federal funds rate. But they can
Yeah.
also do what they did after the 2009 recession, which is change the required reserve requirements that banks have in cash. So they can go up or down or up and down. The higher reserves they have to keep, the less they can lend to other folks because they have to keep those in reserves as required by federal law.
Okay.
If the Fed lowers those numbers, that means they can lend a lot more, and that drives inflation too. But so there's a number of different ways that the Fed can really kind of manipulate inflation. But as an economist said a long time ago, he's since passed away. He said every great economic expansion over the last 20th century did not die of old age. It got murdered by the Fed, by the Federal Reserve. And what does that mean? So what that means is that anytime the Fed starts to see hyperinflation or big inflation numbers, they start raising the rates to try and slow that down.
Yeah.
And right now they're not doing it because everything you hear and you talked about is that they're saying that this is a temporary blip. We're just getting back to normal as as an economy. People are poking their heads out after they get vaccinated and so forth. They're starting to spend again. Supply chain is coming back to normal as we kind of get back to manufacturing. But the question is this a short-term blip, or are we going to have this pretty big inflation number? Even historically, it's running double what the Fed's goal is each year of 2%.
Yeah.
Historically, and it's really more than this, as you just alluded to.
Yeah.
It's 4%. 4 to 4.5% is what the CPI just registered. It's
Yeah.
much higher than that. There's
Yeah.
no
I
doubt
mean,
about that.
lumber is up like 400%. I mean, chicken is up a bunch, corn, all sorts of stuff. And I'm in like my industry, your industry, we're all seeing it. I think that, like, I know we're in, so I like, you can't, this is what I say, is like, you can't pay people to sit and do nothing and then still have money to buy things, because
Right.
then the money just doesn't get, and that's like the thing is, like, you have to understand, it's like there's this huge wheel that we've created. When you stop this wheel for whatever reason, bad things are going to happen. And now we're seeing the repercussions of it. And it's just like, I mean, but it's like, I'm not in politics, so it's like, what do you do, right?
Right.
And so you don't want to kill the people by sending them to work, but then at the same time, and do you think that if this is a blip, do you think that prices are going to come back down? So let's say a house is worth 800,000 now, but 2 years ago is worth 600,000. Do you think it'll come back down to like 700,000, or or like a comic book that's worth 10 grand right now and it was like 4 grand 6 months ago? Do you think it'll come back down to like 4 or 5 grand?
It's a fantastic question, and I think the difference between the Great Recession of 2008, 2009, that was largely driven by real estate and what happened there.
Yeah.
It's a totally different situation that we're experiencing right now with the current bubble. The current bubble is really driven by a lack of supply of houses. Um, People and consumer tastes changing, right?
Mm-hmm.
So people realize that they don't have to live downtown. They don't have to pay downtown prices and downtown taxes
Now that
because they're
people
going
are
to be
working from
telecommuting.
home. Yeah, now that
Well,
people are working from home.
a study just came out, and they did a statistically relevant study that said if you had to go back to the office right now or quit your job and find something else and telecommute, 40% of people said that they would rather quit their job and find something else. In the entire U.S., only 29% of people have actually gone back to their physical office location so far. 29, that's a low number. Think about how big our economy is. Only
Yeah.
29% are back in office right now.
A lot of
Uh,
places are making them letting them stay working from home because they don't have to actually pay for an office building.
right, right. So to get back to your question, I think that the 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 current supply issue is driving housing prices right now, and consumer taste changing. They can go out and live in the burbs, right?
Yeah.
But as the supply comes back online, and as the cost of materials gets driven back down by more supply, lumber, copper, whatever, uh, and housing starts kind of pick back up. Housing starts were down 15% last month, right? Because the cost of materials was so high.
Yeah.
They can't make any money. The
Exactly.
builders. So they're waiting for that supply chain to come back down, and lumber has come back down. It's come back down about 25 or 30% from their peaks. So
Okay.
the question is going to be, once that supply fills out, is it short term? Is it long term? I don't know. But as that supply fills back in, is that going to drive prices way down? And I don't know. I don't see that happening.
Mm-hmm.
But I think that it's going to be driven by how consumers spend their excess money. We got more free time coming up. We got vacations now. We got going out, dining, live events, all that stuff. That I think could affect the collectibles market maybe more than the real estate market.
I guess that
Um,
makes sense.
but Yeah, but look, in 6 months, if the Fed starts to see consistent data of consumer price index numbers showing that we're at a really big inflation number, they're going to put the brakes on it. They're going to raise the federal funds rate. That's going to in turn drive interest rates higher for everything, including mortgages. And
Hmm.
then you'll see it. Then you'll see a somewhat of a slowdown. I don't think you'll see it drop off like drop off a cliff like you did in '08,
Hmm.
because the '08 housing crash was a totally different animal and was largely driven by greed. It was driven by Wall Street executives repackaging these quote unquote perfect
Yeah.
mortgages into mortgage-backed securities. Everyone's probably saw The Big Short. That does a great job of explaining what happened there. And I can tell you for a fact that that was happening even back when I was an investment maker. People were packaging stuff, labeling it as AAA, selling it to Norwegian pension plans, as this is AAA stuff. You're going to get an
Yeah.
automatic 7% return. Well, lo and behold, they're holding a bunch of, rental property condos down in Boca Raton owned by some, stripper,
Yeah.
just like in the movie. Yeah. And
Yeah.
that's exactly what happened there. So two totally different animals. And that's why it fell off a cliff there, because it was all the banks going under. And
And the
where I
people
think,
couldn't afford their mortgages because they would get these
right. Yeah.
the adjustable interest rate loans where it's like,
Yes.
oh, get in for 2%, and then 5 years from now you have to pay 1,000%.
And
Well,
and
not
let me tell
1,000%.
you, and not to digress too far, but I can tell you that I did that. When I was uh, freshly into real estate, I was making like $11,000 at the time,
Mm.
and they were handing money away like candy to kids, right? And I had almost a 0% down loan. All I did was give them my social security number. They didn't verify income. They did
Wow.
all they did was check my credit score, which was very high, but I had no income because I just started in real estate at the time. They let me buy a rental property. It was like, it wasn't much. It was like maybe 80, 100 grand. But
Hmm.
I had no business buying that property. I had no income, but I immediately turned around and rented it out and kept the mortgage ups and
Yeah.
and everything. But I was the exception. I was I was in the industry, but there was a lot of people buying that stuff, as you just alluded to, that had no business buying real estate, and so
Yeah,
it was
they'd
a
work
totally
at
different.
like fast food, and they're like, all right, here, you can have this $500,000 home. And it's
Yeah,
like, what?
yeah, it was a
Like,
totally different cause for that one, and I think that the driver here is going to be interest rates. It's going to be how consumers' job situations look as we kind of come out of this. And the other big thing that we haven't even talked about, that's another factor that's kind of intertwined with what we've just talked about, is how do corporate tax rates change to pay for all of these massive stimulus packages, right? The current administration is talking about raising rates from 21% to 28%,
also
corporate
capital
tax
gains
rate,
tax. Also
and
capital
capital
gains.
gains taxes, and
Yeah.
and the minimum wages. All of those are artificial. If you're looking at it from a purely economic standpoint,
Yeah.
all of those are artificial kind of barrier floors, artificial floors in terms of cost of goods sold. Do you think a business that has to pay higher corporate taxes, that has to pay higher labor costs because of minimum wage requirements, and they're publicly traded, and Wall Street's expecting these quarterly earnings to go up, do you think that they're going to be sit there and pay those extra costs without passing it on to consumers?
I
No,
know.
they're going to pass all that on to consumers, and that's exactly what's happened. Is that they're just raising prices to pay for these artificial barriers. So, again, the current administration just came out and said, okay, we'll back off of the corporate taxes. We'll back off of that if we still get corporate tax loopholes closed, which they should probably, right? There's
Yeah.
some big multi-billion-dollar corporations that aren't paying any taxes in America. That's
Yeah.
ridiculous. But I do think that the idea of raising corporate taxes could be a big mistake, because it's just going to drive prices even higher than they are right now.
Funny thing about prices. So in California, we passed a law where every year the minimum wage has to go up $1
Hmm.
every year, right? So it started out at 10, and I think it's somewhere around $14 an hour or something like that. And I go to some restaurants, this is before COVID, but on their menu, they literally say at the bottom, they say, we don't put prices because they're constantly changing because the minimum wage is always going up. Then we're not going to put prices. So you literally have to ask, because when you ask, it was weird. I was like, what? Like, I don't even know. I'm like, how much is this? And they're like, well, today it's this. And because the thing that people have to realize is like, okay, now you have to pay your waiter $1 more because they work off hour and tip. And then you have to pay your busboy an hour more. Then you have to pay the person in cleaning an hour more. Then you have to pay all these people an hour more. Then the people that drive the truck to deliver the food, that you cook, that's paying more. So everything goes up. And so then that's what I'm always saying about like minimum wage. It's like, if you work for minimum wage and you're expecting the government to raise, that's great. But guess what? When you go out there and you get your $1 an hour more, $2 an hour more, everything's going to be that much more. So you'll be in the exact same boat you were before.
No, it's exactly right. It's basically artificial cost of goods sold, artificial floors
Yeah.
that are being raised. So, and relate it back to collectibles, right? We talked about the massive boom in collectibles, and you mentioned how CGC is all doing all this hiring. They raised prices by 20 or 30% or whatever the number was. On my
Yeah.
end, Action Figure Authority, just who does action figures, they just came out with the same announcement. It says we're going to be hiring, we're going to be expanding. And by the way, we're shutting down our least expensive tiers for a while, our least expensive submission tiers. You can only submit at these more expensive tiers while we get quote unquote caught up. And,
Yeah.
that's really just basically them admitting, hey, look, we got higher labor costs now. We got more facilities costs, fixed infrastructure costs. We're going to be
Mhm.
passing it along to you while we get caught up on
Yep.
the
And that's
on the
what
business.
always happens. They pass. So the interesting thing was, so I've been a dealer for 13 years, but before that, I did random jobs. I worked for a doctor, did all sorts of stuff. But growing up, my dad was a dealer. And so basically, all through I grew up, he sold his business when I was in high school and retired then came back, all sorts of stuff. But he would always have a saying: comics are recession proof, because he went through multiple recessions and comics always held strong. They didn't really see. And if you look at, you can actually go. So we have a thing called like Go Collect, or the GPA
Oh yeah,
analysis.
I watch all your videos, man.
Okay. So you can look, and during the crash of '08, which is the most recent one, comics stayed the same. There'd be like a little tiny up, a little bit tiny down. Nothing changed. They're the exact same. There was no like 50% loss, 50% gain. And so what I'm thinking, is this going to be the same for the collectible market? Is this going to be this massive bubble that's happening everywhere else, not just collectibles, like stocks, everything, like everything's all-time high? Is that our comics are seeing a massive spike? They didn't see a massive spike in '05. But so are they going to also have other collectibles? Are they going to see a massive drop if everything else drops? That's like kind of the question. And I don't know. A part of me thinks, since the rates are so low, people are borrowing money and putting in collectibles, because collectibles you can hide. Stocks, you can't. You can't hide that from the government. You can't buy Tesla and hide it from the government when you make your capital gains tax. You can buy an action figure, you could sell it on the street, you could sell it to someone else, and you could hide all that. So maybe that's why there's a massive boom. People want to put their money in something that's not traceable.
I remember you talking about that, and it's certainly a valid point. I know that when I buy or sell stuff on Facebook, and not instead of eBay, avoiding all those taxes and sales taxes and all that garbage, that's a perfect example of that. I think my question is, I'm certainly not a dealer or really in the industry. I'm just a normal idiot collector, and I look at what what part of this massive run up in all collectibles is driven by discretionary income being spent on this stuff versus vacations and all this stuff that's coming back online right
That's a
now.
good
And
point.
I don't know the answer. I don't know the answer to that. I
That's
know that, speaking for me personally, I haven't taken a vacation in like 2 years, right? I'm getting ready to go to Florida. I'm getting ready to go all over the place, this summer. And, we're going to be racking up $5,000 to $10,000 bills across all these different trips that I wouldn't normally, that I didn't make over the last year. So,
so,
but to go back to your point, there's been, in the action figure market, I noticed the same thing, that during the Great Recession, there wasn't really a massive free fall. There was a flattening for sure, but there's a flight to quality. I know that.
mhm.
I very specifically remember that, like high grade stuff. It's just like in the comic business, high grade CGC stuff, high grade action figures like behind me. The flight to quality was there, and the
Mhm.
lower grade stuff tended to dip a lot more. So maybe we'll
Mhm.
see that with those comics, that have a pretty high number of CGC, low grade stuff, but when the numbers of, for example, you talked about Ultimate Fallout 4. There's a ton of those 9.8s, right?
Yeah.
I could see that one dropping off a lot more than something else like a, you know, some of those early Bronze and Silver Age comics where there's a very limited number of those high grade issues, right? I
Yeah.
could see that, for those where there's a lot of low grade issues, I could see those coming down as this collectible market either flattens or has a pullback of some sort. But
Yeah.
that flight to quality is something that I specifically remember back in 08, 09, that on the action figure side of things anyway, that the low grade stuff dropped like a rock. The high grade stuff held its value really well.
Yeah. The more rare stuff. I'm assuming the high grade stuff's more rare stuff.
Hmm.
Um, but yeah. So I mean, to swing it back to more like real estate and things like that. You've been in this business for how long?
17 years.
17 years. 17 years.
Yeah.
Um, kind of switch gears a little bit. Is there any, if you're looking for example, like me, I bought this house living in right now. I'm probably going to buy another house towards the end of the year. Um, and my thinking is, I've always heard is if you can get real estate, if you don't have to sell it, don't sell it, keep it, rent it out. Because, for example, this current place I'm in right now was built in 1979. The people bought it for $80,000. It's not even, it's worth way more than that now, even before the boom, right?
Right,
When I
right.
bought it. Is that a good rule of thumb if you don't have to sell it and you're looking to upgrade or whatever, to keep it?
That is a fantastic question, and I can tell you, I can only talk about my own personal experience.
Yeah.
I've only I do have a bunch of rental property that I've slowly acquired over time,
Mm.
and I've sold two properties. One of them I did not regret at all because the SWAT team was coming every month. It was just in a complete dump of a building with crime
Oh,
and all that
okay.
stuff. So I'm
Okay.
so glad I got rid of that thing, right? But I got the other extreme where I was in the same situation as you, where I had a house and I needed to upgrade. Well, to be honest with you, we had been so conservative with our finances that we probably could have bought our current house without selling the other one and rented out the other one.
Mhm.
And for whatever reason, my wife talked me in to selling that place, and I wish I had not listened to her because that was a big mistake. I should have held on to it for at least another couple of years because it went up quite a bit more than that. So,
Mhm.
but to answer your question, yes, if you can afford it, and you have the comfort level to manage, getting a good tenant and all that kind of stuff, dealing with repairs and making sure you
Yeah.
got a quality tenant who's going to take care of the place and not beat it up. My grandfather was in real estate, my uncle was in real estate, my grandmother, and now me. And I can tell you that the smartest decision I ever made was leaving that investment banking job where I was literally working anywhere from 80 to 120 hours a week. I mean, there was times where I was working. One time I worked 54 hours straight without sleeping, and that was just how terrible of a job it was. I was almost 300 pounds, right? I left
Oh,
that
yeah.
I left that lifestyle, and I started my own real estate business, and I started acquiring rental property. And I can tell you that it was the smartest decision I ever made. And most of I would call my major investments are tied into real estate.
Mhm.
And yes, it goes up, and yes, it goes down. And we had recessions, and I went through the Great Recession, and a couple of small mini recessions before that in real
And
estate.
you were a real estate
And
agent during that. During
oh
that,
yeah, yeah, I
was
was.
it
Yeah, no
slim,
income certainly, like, it got
slim
cut in
pickings
half. I
out
mean,
there?
it was,
Probably
yeah,
mostly
it was
dealing
pretty
with
rough.
bank-owned stuff, right?
I got
Before.
really I got really good at Gears of War on the Xbox, and I had a lot of excess time on my hands. But we made it through it, and we had rental property income to kind of get us through that. And even tying it back to the current, the last pandemic we had, where I couldn't show houses, my wife got
Yeah.
laid off, and but at that time I had a portfolio of rental properties, and thank goodness they were all paying on time, and
That's nice.
they're cash flowing, and so I was able to kind of offset a lot of my lost income from the pandemic lockdown, through the cash flow of my real property, rental properties. So it's a nice hedge, but it's not without risks. You don't want to get over your head. You want to be conservative about it. I would always recommend, it's not easy to, I mean, this is easy to say, but hard to do, but 20 to 25% down if you can do it.
That's
Um,
really, really hard to
it
do.
is, and it sounds impossible, but
Yeah.
I can tell you that every property I've bought over the last, not those early ones, obviously, that I just told you about, but the later ones, I've always held off buying another property until I've come up with that 20%, 20 to
Okay.
25%.
That's kind of
And
like your rule.
yeah, yeah, and or if I feel like it is right now where the market's super super expensive, instead of buying anything, I might take the cash flow from those rentals and pay down the mortgage early, right?
Yeah.
I bought all these over time, different time periods, and the interest rates on rental properties is a lot higher than an owner occupied, your own house, because the bank's taking a little more risk, right? It's a higher foreclosure risk that you're not going to pay on a rental property. So
Did you refi most of those loans with these low
yeah, you
rates?
can. Some of them are private loans. Some of them, it's just all over the map, right? But
Yeah.
I always pay down those as quick as I can because it's an automatic. If I got one, it's at 5% or one at 6%, which is about, let's call it double what a owner occupied interest rate is.
Yeah.
If I pay that early, I'm getting a 6% return on my money right now, right? Just by
Yeah.
paying it off
True.
early. So,
That makes sense.
so when the market's really expensive like this, pay down debt, just get your finances in order. That's what I did. And I
Yeah.
mean, but I can tell you that we had, this is how bad my luck is. So we about 2 years ago, or 2.5 years ago, we put a contract on a new construction property. And we're
Hmm.
like, it's not going to be done for a long time. Just get it under contract. We'll get it at a cheap price because it hasn't been built yet. Well, guess when we closed on it? We closed on April 17th of last year, right during the heart of the pandemic. 2 days before that, my wife got fired. So, but luckily the bank didn't verify any of this stuff, right before closing. Otherwise, we wouldn't have qualified and we would have lost all these deposits. So, talk about freaking out. We got a lockdown in place where I can't show rental property. My wife just got fired and we just got a rental, we just bought a rental property that we had under contract for 2 years. So there was about a 2 month period last year where I was really freaking out, where I had probably overextended myself a little bit. And
Gonna have to dip into selling some of your action figures.
well, exactly. I might have had to, but what did I learn from that? Right? I learned that I got a little bit too aggressive with my risk management. And
Yeah.
as I've aged, I mean, you're still young, but look at your hair compared to mine. Like I'm a young buck, or you're a young buck. I'm an old man now, so my risk level is a lot less maybe than yours is. I've got two 9-year-olds. I got twin 9-year
Yeah.
olds. So my risk level changes, and it does for everybody, right? Our risk aversion goes up as we get older and acquire assets. If you're
Yeah.
younger, when I was younger, I took stupid risks and they did pay off. But I would say that going back to your original question, it's because I'm in real estate. I really think that the number one wealth builder, wealth creator is, and I'm dumb. I mean, I'll be the first. My wife will be the first to tell you I'm not an intelligent person, but I was able to create a pretty good portfolio just by buying real estate, and some of them did better than others. But uh, it's to me, it's a no brainer if you can do it. It's just hard. It's hard to be uh,
It,
disciplined with your finances.
I had a couple videos about like the issue I find with my friends and stuff like that is people. I feel like almost anyone can own a house, right? Even in San Diego, it's super expensive. Go 20 minutes east, so you can't live downtown. You can't live near downtown. We have Uber, right? Uh, a lot of times, is people don't want to make sacrifices. They get accustomed to a lifestyle, and they like. I have friends. They're about to get married. He is an intellectual property lawyer. So he
Mm.
makes a
You're
couple
doing
hundred.
all right.
Yeah, he makes a couple hundred grand a year. And she works really high up in this like uh, energy bar company, right? And so they make good money. They live in a 1-bedroom apartment because they got in forever ago and they like the location and they love to go out on the weekends, drop $500 on a night out, like it's nothing, and do that constantly. And I'm sitting back, it's like, okay, yeah, I don't want to keep on doing that. Number one, it's gonna kill me to drink that much.
It
But
almost did for me, man.
yeah, and I can't do that anymore. And number two, you look at their credit card statements and it's like you'll spend 4 or 5 grand in a weekend between the two, or not a weekend, like in a month, going out and buying out and stuff like that between them two. And I'm like, that is literally a house payment. And meanwhile, the rent is just going up every single year.
Yep.
And it's just like, and then they're like, well, it's so expensive now. I'm like, if you would have bought 3-4 years ago when I told you to, not only would your house have gone up, but your rent is locked for 30 years. That's what people don't realize. Why I moved in this place, my landlord raised my rent every single year, and I said, I'm done with it. I'd rather pay a high rent, and eventually it'll just catch up. And
Right.
I got in at 6.5% interest rate, or 6.1, and just every year I refied to 3. Now I'm down to 2.3%. And now my mortgage went, when I first moved in, went from 3,000 to about 2,200.
Yeah.
And now it's cheaper than the rent I was paying before in a tinier place. And that's, I think people just don't want to make the sacrifice. They don't want to do, like, not buy anything, like not go out anymore. Like, you can still go out. You just don't, like, I tell people, like, go over to someone's house, pre-party a little bit, then Uber. Now you're into for a pre-party and you can a couple beers for like $5 and then you get split an Uber, done. Or like, if you're going out to eat before, so when you get to the restaurant, get something small. So I don't know.
The other thing is too, man, you get the property tax that you pay each year. That's all tax deductible. Your interest expense is tax deductible, and part of your payment is going towards repaying the principal. You're going to get that money back whenever you go to resell it. So
and the money's working for you. It's the house. Here's the one true thing: unless you were in Detroit when everything left, all the factories, property will always go up. Like, pick a major city, a minor city, the surrounding areas. Look at it, and any historical data will tell you that it's been, there's huge bubbles and huge spikes. If you would have bought a house in what was the peak? 07?
Oh yeah, 07. Mm-hmm.
07. If you would have bought a house in 07 at the tippity top, you will now have a higher value house today. That same house.
David, that's exactly what happened to me. I bought an investment property right near Vanderbilt University in 07. It was like October of 07, right as Lehman Brothers was getting ready to be burned to the ground, right? And I paid the peak, and within 3 or 4 months, that value had been cut in half. It was down to like 80,000, I think the last sale was. And now they're going for almost $80,000 more than what I paid for, back in 07. But in the meantime, I still got renters in there the whole time who are paying that mortgage, and and it's cash flowing. So at the end of the day, it almost doesn't matter. As long as you get a house and get some of those tax benefits for yourself, that's the first step.
Yeah.
You can after that, you can start, really building wealth by even just get one rental property, or if that seems too hard, invest in stocks in a nice, diversified portfolio, and put your money to work that way. And then if you wanted to diversify out of stocks, in my opinion, now's a perfect time to diversify away from stocks, right?
Yeah.
Because it's gotten so high. So you can always pull it out and redistribute. It's not like money that's in stocks or in collectibles or whatever it's in. It's not like you can't sell it and put it into some other form of asset. So I think it's, some of your advice on the channel about the 1/3, 1/3, 1/3 lifestyle, all that stuff is stuff that I've been doing for years. And when I see that kind of stuff, it's unfortunate, but the majority of our country doesn't do that, and they need to examine how they spend their money,
Yeah. Like, the whole point of my channel is, I'm in comics and I talk about comics, but my point is, like, look, comics are great. They're awesome. I love it. But they can also be an investment. And not only do I talk about that as an investment, but it's like, I'm trying to, the little knowledge I have is to help people to look at their life as an investment, because there's no one out there, the government, family, friends, I mean, they might help a little bit, but they're not really going to help you. In the end, you're there by yourself. Your path is dictated by your own self. So you might as well use what knowledge you have, YouTube, all that stuff, and try to invest and make better decisions. So when you're older, like, hey, My kids are taken care of. I have a house. I have this. I have my basic needs, all this kind of stuff. I have money to do things now. And you have to make little sacrifices and just, to figure out what's best, right? And it's like, look at every super rich person. They all own property or they have funds that own property. So real estate is, and there's always more people coming in than there are going out. And so they need someone to live. That's
Well, this is mind blowing. This is a side story, and this is more to show you how luck can play a big part in it. But one of the properties that when I'm in real estate, I own a brokerage, right? I own a real estate brokerage, and one of the requirements, at least here in Tennessee, is you have to have a physical office that can't be at your house. So you have to own or rent an office. And so we were looking at renting an office. It was going to cost us $2,000 a month. Or we could buy this building that was zoned for either residential or commercial. It's dual zone. And the mortgage on that was going to be like $900 a month. And so I was like, well, why would I rent this? It was admittedly a very swanky place. It was very nice, all these hardwoods and, all the urban stuff. It's $2,000 a month. Or I buy this dumpy building that we could fix up a little bit and it'll be serviceable, but it's an asset. It's a hard asset, like you talk about in your videos. And we get some benefits there. Well, so we paid like 230 something for it. Yeah, this is a long time ago. The one right next door to us, exactly the same as ours, just as dumpy, and on a smaller lot. It just got listed last month for 1.04 million. So so that is an example of number one, luck, but number two, if I had taken the path of your IP attorney and gone for the swankiness, gone for the the flash, and gone for the cool looking rental versus putting my money to work in a really ugly asset, but a really ugly asset that's turned into a beautiful swan for me. You know what I mean?
Yeah.
So so it's just something you got to think about. And the other big thing that I really that I did early on when I was just out of college, even as an investment banker, I was making nothing. This is back in '99 when they didn't pay you anything. It was all tied to bonuses. I was making like 30 grand max, and I still maxed out the savings plan that went to my 401k. Back then, I was like 21 years old, right? But because they had a matching 401k plan, so every dollar I put in, they would match it for another dollar. And the result was I had no money, right? Because I had this already small salary that's being cut down by being forced into savings. I was forcing myself to do it. And so I would eat like, Campbell's noodles and some deli meat. That would be my dinner when it wasn't paid for by the banks for working late nights. But if I was at home, if you went in my house, I mean, it was really bad. It looked like, kind of post World War II bombed out London. It just there's no food there, and it's because I didn't have any money. But I forced myself to put all that money into savings, and think about how much that money's compounded now in the stock market from '99 to where we are now. It was a really smart decision, and I'm glad I did it back at the time.
I'll do one quick story. But my dad, when he sold his business and he retired, he put, I can't remember, it's 10 or 30 grand into Apple, something like that. And this is 2003 or I don't know, somewhere around there. And we did the math, and he had it in there and it started dropping. And he's like, stocks are dumb. He's pulled this money out. If he would have just kept it in there and forgot about it, it'd be something in the millions. It'd be worth in the millions. And that's just kind of like, what did he do with that money? You know what he did with that money instead? He bought a car or a motorcycle or something like that instead. And it's like, where's that motorcycle now? It's in a dump somewhere. It's like he bought, there's some motorcycles, and it's like decisions like that could drastically change your life 20 years down the road.
Oh,
drastically.
I'm in the middle of it right now. So I can only, it's not like I've made perfect decisions. I had a 72 Bronco that I sent to this guy to get, renovated and fixed up. Dude was a scam artist. It got delivered back to me in pieces. I lost a lot of money. In case my wife watches this, I'm not going to tell you how much money I lost, but I can tell you it was a significant amount of money. And I
Wow.
just sold it to some guy on eBay. I sold it on eBay to some guy down in Mississippi. He shows up with two 70-year-olds. The four of us, it took 6 hours. We got it all loaded. He paid me $21,800 in $100 bills. And so I'm like, but that's not a gain. Let me tell you, it was a
Yeah.
massive loss, and it was because I was stupid and decided to get cute and take money that I should have put in real estate or in the stock market or in some other hard asset. I put it in a stupid Bronco, you know. So I make dumb mistakes too, and I can tell you that classic vehicles are not a hard asset after going through what I've gone through the last 2 years.
Yeah.
So.
So we since we're at 45 minutes, we are actually going to go over to your channel now.
All right.
And
All right.
you're gonna, I guess, interview me. So if you want to check out more of us, and we continue to talk about this one, we talked more about finances and investments, and the other channel we're going to talk more about collectibles and action figures and more of that.
And your
kind
background, I'd like to hear your background too. Hear more about you.
Yeah. So yeah, it's more of this was I was interviewing him. He's going to interview me. So once again, it's Action Figure Grader. I'm Comic Book Investments, and we will see you on his channel for part 2, I guess.
Sounds good.
All right, cool.